Hmm, hmm, hmm. Good morning, everybody. How we doing on this fine hump day Wednesday? We still got the majority of the week ahead of us. That means the majority of opportunities that are available this week, we still got ahead. The majority of chances we have to close the gap between where we are and where we want to be are still available to us, right? Which is an inspiring thing. It's a thing that should get you pumped up. I was back out running this morning, back in the cold. Felt like my lungs were on fire. Wanted to collapse on the floor when I got back, but made it, right? Got it in, did that. I know I'm looking grizzly, trying to figure out if I'm going to tough it out for another week or go see my barber soon. But excited to be here, and I'm going to dive directly into things because we have a lot going on that needs to be covered. Important day, and I've got a little deadline to be out of here. So let's dive into it. As always, we're here to get 1% better. That is the goal. So make sure you're dropping your one in the chat, setting your intention to get 1% better. You have to be intentional about each and everything that you do. If you think you're going to sit here, hang in the background, soak some things up, not be involved, what results are you going to get? Results that sit in the background, not very spectacular, right? Not really life-changing, not going to do anything for you. Right, you have to be fully in order to be in. You don't just say, okay, I'm gonna, kind of chill, but I'm gonna get amazing results. Those two things do not correspond literally in any sector. There's nowhere where you go, you chill, you don't really set any goals or set any intention or really put any faith behind what you're doing, and then you're like, wow, that was life changing. It can't happen anywhere. So make sure if you're there for the right reasons, right? And you're setting your intention and you're putting effort forward because that's the only way you're going to get results. Otherwise, it's a waste of time, baby, right? So let's come with that intention, come ready to execute, come ready to remain patient, right? And see the wins stack up. Now, in terms of top news here, wait and see. While a refunding announcement from the U.S. Treasury will be closely watched by the market this morning, the latest monetary policy stance at the Federal Reserve is also on the radar this afternoon. The FOMC is widely expected to hold its policy rate at 5.25 to 5.5% for the second straight meeting, but it is also likely to keep the door open for further tightening if needed. The wait and see approach has led many investors to put a strong emphasis on incoming economic data, but there won't be any new economic projections at this meeting, putting a bigger spotlight on Fed Chair Jay Powell's policy statement and press conference. So that's going to be the most important thing, right? Powell is wholeheartedly going to be the most important piece of, market influencing factors today. So in terms of a snapshot, a U.S. economy that's continuing to exert surprising strength combined with geopolitical risks complicates the Federal Reserve's job of bringing down price pressures. Less than 2 weeks ago, Powell indicated that persistently strong economic growth could lead to resurging inflation and require further tightening, but he's also aware that the rate hikes the central bank has already implemented haven't achieved their full impact yet. In addition, long-term Treasury yields have surged in recent weeks, doing some of the heavy lifting for the Fed. Some are also questioning whether and how conventional economic models like growth-fueled inflation still apply. Quote, holding to the simple historical correlations of what growth and labor market conditions mean for inflation in the face of positive supply developments is a recipe for overshooting and causing an unnecessary downturn, said Chicago Fed President and FOMC member Austin Goolsbee. Now, another reason why the traditionalist perspective on the current underlying economic environment, quote, may miss the mark is the role of the central bank credibility in keeping inflation expectations anchored now versus past periods of high inflation. So in terms of seeking alpha commentary, quote, the only problem with the data-dependent approach is the data does not support the hold, right? Seeking alpha analyst Amir Tokic. He cites the GDP growth rate for Q3 quarter over quarter at 4.9% full employment, an extremely tight labor market and widespread labor strikes that are inflationary. Tokic also flags the current core CPI inflation rate at 4.1%, which is double the Fed's 2% inflation target, as well as a host of elevated global tensions. Quote, so this is not a data-dependent approach. This is really a wait-and-see approach, or even better, a wait-and-hope approach. I don't disagree with that, right? We are in the midst of a lot of different pieces that are inflationary, right? We've got war going on, war on multiple fronts on multiple continents. We've got issues right now, which we've been talking about with the labor market, right? With the strikes that are going on, with the unionization that's happening. And I feel like that's significant, right? So we have all these different factors that are kind of pushing toward inflation like not going down, right? The prices of things are going to continue to go up based off the circumstances that we currently have. So that's really where we're at. And I think wait and hope is a more accurate depiction than kind of being data dependent. They might be the same thing, but it's just, again, when you talk about what the Fed is trying to do, there are a lot of different factors that the Fed doesn't control. My dad growing up always said, control what you can control. Oh, we got notifications going off. Let me see what we got happening here. Oh, nothing. That's just SPY breaking that previous pre-market high. But yeah, the Fed has a lot of different elements that it cannot control that influence inflation, right? And influence the prices of things. And they have absolutely no control over that. So it makes it really tough to get inflation back where you want it when there are a lot of factors that you don't control when it comes to inflation. Mainly unrest in the Middle East, the war in Ukraine, unionization, right? All of those different things are coming to play a role to push prices higher. Now, in terms of in all those, kind of any random or volatile events that happen because of this can also impact prices, right? Russia's involved in a war. We got the Middle East involved in conflict. That drastically affects oil prices, right? Any little thing overnight can drastically affect oil prices. If so-and-so refining facility is bombed, if there is a, military blockade that doesn't stop, that stops oil from being exported from a certain area, all of this we can wake up to, and that would not be an outlandish headline, right? And suddenly gas is up at all-time highs, and gas is already back high again, right? So in terms of the real estate sector, commission collusion, digital real estate stocks, including Zillow, Open Door, and Redfin, dove soon after a Missouri jury found powerful realtor groups and brokerages guilty of conspiring to inflate commission rates. Defendants were ordered to pay $1.78 billion in damages, though a final judgment in the case still needs to be issued before the verdict is finalized. The suit also included Remax, ticker RMAX, and Anywhere Real Estate, ticker HOUS, as defendants, whose shares fell in the announcement, though both companies have already reached settlements. It's too early to see how things will play out, but the decision could rewrite the entire real estate model in the U.S. and change the way agents are paid. This is just Zillow once again being caught up in stupid legal stuff. Zillow had their AI going out and bidding up. Was it Zillow or Redfin? It was one of them. It might have been Redfin, but I think it was Redfin. Had their AI going out and bidding against itself in order to bid up prices for homes to drive home prices higher. And they were like buying the homes too. So it was bidding against itself to drive the prices higher and then buying the homes. So it's costing Redfin money and it's costing everyone else money, right? So there's just, I don't know. It's in every sector, right? There are shady actors in each and every sector. So I'm not going to say, oh, there's a lot in real estate and then there's a lot everywhere, right? And this is just part of human nature, So it was one of those things where they got the news, those stocks made a move. Am I looking to play on them now? No. You guys know me. I'm really focused on playing blue chip stocks. Playing things that I'm getting in because of the technicals, not because of news, right? Things where I have an idea of where things are likely to head. So we'll see. A lot of these tickers have earnings coming up too. Redfin has earnings tomorrow. Redfin, I like to the downside beneath, what is that? 4.9, but it's already like the shares are less than $5. So I don't imagine that they're even optionable or that would be worth it. But we'll see. But I'm not, in terms of trading, I'm not really looking to trade any of those, based off of this news here that we got, especially with earnings coming up for them. So it looks like Zillow has earnings, today after market close. So yeah, not really looking to take any advantage of that. And let's see here, looking back at Zillow, it doesn't look like it's made crazy moves, during earnings anyways, maybe after earnings, right? But during, like, over the actual night, no crazy moves for them. In terms of healthcare news, xenotransplantation. The second person ever to receive a pig heart transplant, Lawrence Fawcett, has died close to 6 weeks after the procedure was carried out. United Therapeutics, ticker UTHR, through its xenotransplantation unit Revivicor, provided the genetically modified pig heart, while Eledon Pharmaceuticals, ticker ELDN, investigational unit, anti-CD40 antibody wow, they're really testing me. Antibody tegoprubart was used to prevent the body from rejecting the organ. During the first month after the surgery, Fawcett been engaged in physical therapy, but the transplanted heart started showing signs of rejection in recent days. David Bennett, the first person to receive a pig heart transplant, died last year, 2 months after the landmark surgery. So it looks like 2 months tends to be how long you could live with a genetically modified pig heart. Yeah, I mean, I don't know. It's sad, sorry for his family, all that. It's kind of one of those things where, you hit these like medical trial periods and then eventually, hopefully you make some big type of breakthrough. If I needed a heart, I ain't gonna lie, I'd take a pig heart, right? I'm not picky. At the end of the day, I loved Babe growing up. My grandma would watch, I had Winnie the Pooh and Babe on repeat. So, um, I'd be honored, right? I'd be honored. But we'll see what happens. I'm not a big like pharmaceutical, therapeutic, deep into these medical articles type of thing. That's not me. I'm trading blue chips. I'm not out here like trying to gamble. But United Therapeutics, right? If we look at them, check out their chart. If the death of this guy does, cause some bearish sentiment to happen, then if we close beneath 216.42 on UTHR, which is their ticker, we close beneath that. That could be nice in terms of long put swings. We close beneath that on the daily, right? On the daily and really on the weekly, because it looks like on the weekly / maybe even monthly, they've got a large bear flag forming out here. So let me see here. Yeah. Nice shooting star rejection off the omega zone on the monthly bear flag, putting in another potential monthly shooting star here. Yeah. Let's see what these contracts even look like. See, that's the thing too, is that these tickers are a lot less liquid, so they have these huge spreads that don't really end up being very enticing to take trades on. The spreads might not be too bad if you go for the fill on the mid, but yeah, I mean, in terms of this, when you're talking like monthly bear flag, things like that, you'd be looking at like 200 calls for 200 puts, 200 strike puts for $500 a pop. So you can keep an eye on UTHR from there. They have earnings, I believe, soon as well. Yeah. Did they already have it? I'm trying to check out the earnings. Yeah, they had it already. So they had it today, actually. They had earnings today. And they got that, news. So UTHR potentially swing opportunity, right? If you keep your eyes open. Let's see, in terms of, did we lose that short term? Yeah. Yeah, I mean, something to look at. Right now in the weekly, they're putting in a hammer. You don't want to see that, right? You want to see that weekly. You want to see us lose this previous weekly low at 216.42. If we can do that on the weekly, then I like those, next year, kind of 100 days, 300 days out in terms of puts to swing on UTHR. So, maybe you could squeeze a nice little play out of that from the xenotransplantation news, right? So on the move, we bankrupt. Sheesh. WeWork, ticker WE, continues to plunge down nearly 40% in pre-market trade on reports that the company will file for Chapter 11 bankruptcy as soon as next week. It underscores the flexible office space firm's dramatic reversal of fortunes over the past 4 years, with a market cap of $47 billion in 2019 and now worth just $185 million. WeWork flagged going concern risks back in August and had been renegotiating leases on almost all of its locations. Seeking Alpha analyst Pacifica Yield also previously warned that WeWork would, quote, need concessions from lenders and landlords to avoid bankruptcy. Looks like they didn't get those. Horrible optics for Adams out here with the way Adam Newman handled that. But it is what it is. And arguably, he left out of the situation up because they had to pay him billions with a B to leave. And all he did was jet set, swindle people, and make deals. So, the dude, honestly, very charismatic, but, just didn't deliver. And this really isn't the time to be involved with something like WeWork, especially given the broader implications of the market and where we are right now. In terms of today's markets, all of this is different, right? All of this is different. I think at that point, SPY was down. Things were down. Now, it looks like more than likely we'll open green. Maybe right around where we closed. Open a little bit red, maybe right around where we closed. Looks like we're rejecting that previous hourly high pretty handily. In terms of today's economic calendar, we get PMI manufacturing at 9:45. That'll be significant, right? So 9:45, we get PMI manufacturing. 10 a.m., we get ISM manufacturing. Those two things can be important, right? So we've got data at 9:45, data at 10 a.m. Then we've also got the FOMC announcement at 2 p.m., which everybody's kind of expecting to be the same and not really expecting a whole lot of movement after that. And then Powell at 2:30. So this just seems like a day where, again, beginning of the day, you do a bit of sitting on the hands, you wait till the afternoon, see what Powell gives us, right? And then you position in a position that has some conviction, that has some volume behind it. And that's what we're looking to do. So, for me, as of right now, that is still the downside. I'm not expecting big things from Apple with their earnings tomorrow after market. So if we get a nice setup for puts today, right, whether that's through Powell speaking, whatever, we get a beautiful setup for puts, maybe even put in like a nice shooting star on the daily. And then we grab puts, we go into Apple's earnings setup with the puts. Apple fails, right? That is just chef's kiss, drop like a brick. So we'll see if that ends up being the case. Just a theory, but one that has enough credibility based off of the technicals and based off of the fundamentals that can surely come to pass. Enough probability that it would be foolish to overlook, right? So in terms of what else is happening, we'll finish up here with our rapid fire stock news rundown. Druckenmiller, Yellen made the worst mistake in Treasury history. Tesla, ticker TSLA, wins autopilot case in California involving fatal crash. AMD slips as ongoing gaming weakness hinders guidance. I think they're back at break even by open here. Gene therapy from CRISPR Vertex is embraced by FDA panel. BP boss dismisses takeover speculation, defends Q3 results. EV push, Toyota, ticker TM, to invest $8 billion in battery plant. NVIDIA's valuation drops below $1 trillion amid China worries. Bayer ordered to pay $332 million in Roundup cancer trial, and then AB InBev, ticker Bud, gains as pricing actions offset lower beer volumes. Caterpillar, ticker CAT, falls amid investor concerns about future growth, and then S&P CoreLogic, Case-Shiller, home prices rise more than expected. So speaking of NVIDIA, watch out for NVIDIA, right? We have that potential gap fill to the downside, something to keep an eye on. We put in a hammer on the daily yesterday, right, which is a bullish reversal candle. Can we continue to hold that up? I don't know, right? But NVIDIA does have, a gap below. So we might see that gap fill. Does have, a potential weekly head and shoulders as well. So NVIDIA just important to keep an eye on here. If we lose this, what is it? I'd venture to say, see if I can zoom in. If we lose this 403.11 level on the weekly on NVIDIA, I like NVIDIA puts to the downside, right? 403.11 on the weekly. So that means by Friday, closing beneath that level. We do that. I like NVIDIA put swings, 3 months out, safe. But we'll wrap it up there, guys. Wrap it up. Put a bow on it. Take it out. Good morning, everybody. Hope you're having an amazing morning. I hope you're ready to execute today, right? To dive into what we have going on. As always, if you want to learn more, right, want to learn for the free, right, want to take in very important lessons and content, make sure you check me out on Instagram. You're following me there at Adam Powell Educates. And other than that, let's make it another great day. Make sure to remain patient, PAYTIENT. And, we can reap the rewards from there. But we've been on top of it in terms of shorting the market the past few weeks. It's been super profitable. Let's look to continue that train. Everybody have a great day. I'll see you back here tomorrow morning for our next Premarket Prep session. Have a good one.